Hello, everyone. This is Stavros Tousios. My name is Stavros Tousios. I'm the market specialist for FXPRIMUS. I want to welcome all of you again, once again, here to our monthly engagement of the pre-NFP webinar that help us, of course, anticipate for today's NFP figures. Before we start, I'd like to tell you a few important things about FXPRIMUS. FXPRIMUS is globally acclaimed for offering one of the fastest and most secure online trading environments available anywhere in the Forex industry. Our extra measures in safety have positioned us at the front runner in responsible trading, and we are setting new standards in safety amongst our counterparts in the Forex industry. We enable clients of all experience levels to trade over 120 instruments, including currency pairs, commodities, CFDs, and indices. FXPRIMUS sets the benchmark in safety for its industry-leading safety mechanisms. We were the first to offer client fund insurance coverage of up to 2.5 million euros per claim and offer third-party monitoring for client withdrawals by Boutique Client Trust. In FXPRIMUS, we are going the extra mile to offer you protection unseen anywhere else in the industry. Now this is a little bit about me. I have traded professionally for about a couple of years, maybe 2-3 years, I would say, successfully, and I just decided to take this a step further and the Forex market as a professional here in Limassol, so that I can share my knowledge and my experience to people that are either starting right now or people that have started in the past but didn't have the opportunity to learn. So this is my contact information. You can feel free to follow me or add me on any of those accounts, or also email me at my work address. Before we start, I would like to read to you our risk disclaimer. Please note that Forex trading and trading in other leveraged products involves a significant level of risk and is not suitable for all investors. Trading financial instruments may result in losses as well as profits, as your losses can be greater than your initial invested capital. Before undertaking any such transactions, you should ensure that you fully understand the risks involved and seek independent advice if necessary. Any opinions, news, research, analysis, prices, or other information contained on this webinar or linked to from this webinar are provided as general market commentary and do not constitute investment advice. FXPRIMUS or its representatives do not accept liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information. So this is our agenda for today. We are going to check the general market zone. Okay, so how the euro, the dollar, and other economies actually have performed since last month, as this is what will be setting the tone for the NFP as well. Okay, we will look at the economy's expectations. We'll check whether those are realistic or not compared to last month or previous months. The hourly earnings, of course, the wage growth and the unemployment rate. We will look at other employment components, the ISM and the non-ISM manufacturing, the ADP, the challenges report, and other reports, just to quickly grasp how the market is positioned currently. We'll also check our charts, of course. We will see squeezes most likely and low liquidity. We'll also check the bonds, the commodities, and the equities markets, as well as the inflation levels and the business activity, because they are key variables of an economy's health, mainly the US, of course. Then we'll go to our arguments and see the pros and the cons for a good or bad NFP, and we'll close with how to position yourself. Okay, there will be no more slides for today. I will go straight to our first page. Actually, I will start with this page over here from FX Street. Because I want to look first at the US and the EU rates. Okay, we can see all the current interest rates over here from all the banks around the world. Okay, we can see that the US rates are at 1.5, the European rates remained at 0%. And we really want to see this because the expectation for a rise, for example, over the dollar over the past few days would favor the dollar. Okay, now ECB kept the rates unchanged yesterday. We had the ECB minimum bid rate yesterday. They kept it at 0%. The US rates are at 1.5%, unchanged too. But as I said, the latest developments in the market, including Powell's speech, and also the recent tariffs introduced in the global markets by Trump, they change the investor sentiment. And also this may change Fed's outlook about the number of times that the US is going to raise the interest rates in 2018. Okay, we saw the euro dollar rising during the week, and that move was led, of course, by risk-sensitive assets. Okay, the pair. Let's have a look on the charts. Okay, the pair is bullish above 1.24. Okay, so yesterday we had a downward pressure on the markets below, and the markets are now actually just a tiny bit lower than 1.23. On the dollar yen side, that one was down for the week, not only due to the dollar's weakness, but also due to Kuroda's remarks on a possible monetary untightening in Japanese government bonds. That happened last week. I think it was last Friday. But of course, now the pair dollar yen upsurged above 106 yesterday, and it currently trades near 107. Now you may ask, is this bullish? Well, I would say yes, but note that NFP could be already priced in that move. Okay. Now, as you see here, I have identified some key levels on Euro USD and also dollar yen. On the Euro USD, I have drawn a Fibonacci extension to see where this second leg could extend to. We saw the price broke about the 100 Fibonacci and could be heading to 107. I have also drawn a couple of lines here because we have very good activity. Okay, so we are just ahead, a few minutes ahead of the NFP now, 20 minutes left. And those levels actually are still seem to be pretty appropriate for the markets. For the euro dollar, I have pulled a Fibonacci retracement from bottom to top, and also another couple of lines over here, good activity levels as well, 122.83 and 123.16. And price is actually currently just trading around, the pair is trading around the 50 Fibonacci retracement at 123, also a psychological level. So both euro dollar and dollar yen, they are very close to psychological levels. Okay, 106.7, which is a hundredth, and the 123, of course, which is a bit stronger. Okay. Now, what I want to do is I want to go back to let's go to the economic calendar. We want to look at the previous results. Okay, the previous report came out at 200K. Okay, this was 20K better than expected, and also 40K higher than the previous report. But also the previous report was revised up from 148K to 160K, and that was the main reason of the euro dollar reaction. Now, the divergence between the two previous economists' forecasts was 9K less, and today's expectations are 20K actually more jobs added. I think this expectation is realistic for today, and I believe that revisions are also in play this month, but I don't think they will be too big because the expectations and the previews are actually the same. Okay. Now, we may see an upward or downward revision, maybe on a 5K scale or so. Please don't forget about the revisions and also the conflicts, the unemployment rate and the average hourly earnings reports could impose. In terms of the votes, of the economist votes, there were 78 estimates in total. The highest estimate was 300K, the lowest estimate was 160K. Now, this is a standard deviation of around plus minus 21K, and that is up from the 18,000 last month. Okay. Now, on other reports, we also had the ISM and the non-ISM employment indexes. Okay, both of them went up over the last two reports. Okay, and this, of course, could be a very good for the for this signal, for this NFP. It would be a good signal for it. Okay, but note that the economists expect a no change, so we could get a number that won't have as much impact because it diverges between the actual, the previous, and also the expected. Figures may be marginal. Now, in terms of the jobless claims report, the jobless claims report came out worse than expected yesterday. The previous figure was also downward revised, but that was only for 2K. Okay. And another report that we need to look at is the ADP report. We can go actually, we can just go on the previous week just to check. Okay, and this is to today. So the ADP report. Wednesday, so there we go. So as we said, the ADP came out better than expected, much better actually, and the previous result was also upward revised for 10K. Okay, now I don't want to go into much detail. There is also the challenger cut, the job cut reports as well here. This is actually the number of jobs that there were cut, and it's 20% down from the previous announced 44,000 in January. Okay, and of course this is because the labor market is becoming more tight and more tight because the unemployment rate is falling in the US. Okay. Now, in terms of the markets, let's go chart back to our charts. We said we need to check for liquidity and squeezes. Okay, so the best way to do this is to add a Bollinger Band. Okay. And you will see that we are actually seeing a good squeeze over here on the dollar, on the euro dollar, and we also are going to see the same on the dollar yen. Okay, this is a bit more upward. There is no squeeze too much, but we had a very good squeeze on here and then a break. But we see an upward trend. Okay, there's no squeeze over here, but we do see that the liquidity is indeed low. Okay, now don't forget that the dollar yen is always the purest pair to trade. But I want also to remind you that according to the interest rate differentials, another good pair to trade during the NFP would be the one that has the largest interest rates against the one that has the lowest interest rates. So in this case, the New Zealandian dollar against the Swiss dollar would be a very good opportunity too. Okay. Now, what else we can do if we just leave the technicals for a minute? We can check the treasury yields where they are today. If they are up, here's how the rule goes. If they're up, they're pricing in for a good NFP. Okay. Now the yields are up today, of course, but they were down yesterday because the jobless claims fell. And this is despite the fact that the Trump's tariff increased the risk sentiment and took dollar on a higher level. What else we can do is also we can look at the oil. The oil is also a very important component for the NFP because the oil is actually inflation depends on oil. Okay, so inflation is the number one component that we need to look at in general for to understand if the economy actually is increasing with a growth that is healthy or not. Okay, Now, any growth above 3% is considered to be a bit recessionary. So inflation is very important. Now, when the inflation goes up, the rates are low. Okay. Now, oil has fallen over the past few days. Okay, and this could be a signal for a good NFP, as when the economy accelerates, oil is likely to become a bit more expensive. Okay. Now, generally, oil prices right now are a little bit higher than where the recent low. But on the short term, I would say that the oil price has fallen. Okay. Now, another thing to look at, of course, is the DAX, the dollar index. The dollar index is also rising up, which is a good indication for a good NFP. Okay, and another thing we could also look, of course, is the equities. Okay, what's happening in the equities? They are also up. Okay, in the short term, of course. But let's not forget that this is a very big correction. Okay, this correction actually is a correction that hasn't been seen for 2 years. Okay, and that happened actually because there were concerns that the interest rates will rise 4 times this year in the US and not 3, and that was because, of course, there's this uncertainty about inflation. So keep this in mind. Everything moves around inflation when it comes to fiscal or monetary policy. Okay, so we did have a tumble over here on global equities. So this may be good for the NFP, but on the short term, we see some correction of the correction. Okay, so we see price moving back higher. So in the longer term, we should see prices actually breaking this resistance and moving higher. Okay, now what else I want to discuss is everything that we have said so far pretty much. We need to differentiate into a good and into bad for the NFP. So we're pretty much just having our arguments. Okay, so we did mention that we had, let's go over here. We had, okay, this is for today. We did say we had very good reports on the employment component of the ISM and non-ISM manufacturing. So this is a good one. We said that the consumer price, the consumer said, no, actually we didn't say it, but it did. The consumer sentiment, this is the University of Michigan report that comes out. This rose and rose to 2004 records. We did mention the ADP report came out better than expected, and it was also revised up 10K. The job cut report is also good. The nation's employers announced plans to cut 205 less jobs than January. And also the dollar index is benefiting the US dollar. Now, in terms of the bad for the NFP, we did say that the unemployment claims rose, and we also found that the consumer sentiment is down. Now, in terms of positioning oneself, okay, we're going to have to go back to our charts. I want to, of course, mention that is very, 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 very important that we don't only just look at the headline numbers. Okay. So let's go to today. We are here. Okay. I wouldn't recommend that you only look at the headline numbers. The headline number is important indeed, but if the hourly earnings, which is the wage growth, and is very, very important at this time in period inflation, and the unemployment rate actually are worse than expected, then the report will be mixed. We really need to have consistency in the results in all 3 components of this report in order to be able to just say to ourselves, okay, if the divergence is over 20K or so and up, and then the average hourly earnings is bigger than 0.2, and the unemployment rate is 4%, this is a drop, right? So this is very, very important as well for this week. Then we can say that I can position myself for a long or a short trade, But it's very important that all components are actually directing into the same, heading into the same direction. They're all either positive or negative. It's very important. Now, we can also look at how many revisions there were, okay, and how much for. Now, past few revisions mainly, okay, not all, of course. Notice that the biggest NFP number for last year was 250K, around 250. And that was for the revised December's release. The expectations were 312, and that was the January release. We had a revision of 12K, which is not big. As I said, anything that is a revision of over 30, 40, or even 50K is significant. Anything below this doesn't matter. So today, I do believe that we'll have some revision too, but I don't see this being anything above 5K on the up or minus. Maybe even 10, but I don't see this having much of an effect, at least for the headline. Okay. Now, I want to again to highlight how important this is. The 4.1 has been kept there for 3 or 4 consistent reports, as I remember, and it's a 2000, the year of 2000 record low. Now, if this falls, then this is going to mean that there is the U.S. labor market is really tightening, and that there won't be many workers actually that they will be available to work. Okay, and what that means is that businesses will be short in finding employment, and they will be forced somehow to rise wages to make their jobs more attractive. Now, as we said, as long as NFP is larger as 201K or 200, and the hourly earnings are above 0.2, and the unemployment rate comes at 4, we could see a rally on the dollar yen, let's say, a rally towards 107 and higher. In case the opposite happens, we could see price moving lower to around 106.4, 0.6 first, and then 0.4, and maybe even lower to 1.6, 106.2. But this is a bit further down the line if this downward move continues. On the euro dollar, if all the report components are favorable, we should see euro dollar heading towards 122, 122.76, 1.226 and lower. If the headline numbers and all the other components are not favorable for the dollar, then we should see euro dollar moving up towards 123.2 and 123.35 and maybe even higher. We do see a squeeze here, so I would expect this move to be a little bit more forceful, let's call it. Okay, now if the reports are mixed, so if any of the numbers does really come close to the estimations or as expected, we should see markets being mixed. We're more likely to see whipsaws, and in that case the technicals may be limited. Okay. Now, once the reports comes out, we will see a lot of spikes, okay, whether upward or downward. Now, I want to remind you, as I do in every webinar for NFP, that entering into the markets without having experience, first of all, is not wise. Entering the markets, even if you have experience, is not wise either, because the NFP can create wild fluctuations and wild whip shows. And in any case, if you are in, I would recommend that you always use stop losses and take profit levels. Okay, make sure you can afford what you're entering the market with, and don't go crazy on volumes. Now, the important thing is that if you're really keen to position yourself in this event, it's always better if you do it once the markets have settled, once all the liquidity and all the institutions have left and they're out, or even when they're taking profits. So saying this, it's good to give the markets 1 hour after the event, maybe even 1 hour and a half, to see whether the markets actually are going to reverse or continue the breakout. There will always be some sort of signal. Okay, it might be support or resistance level, it might be a Fibonacci level, it might be the Bollinger Band, it might be moving average, it might be candle formation, which is more likely. It could be anything. Okay, but what I can guarantee for sure is that you will see a break. Okay, while this is due in 4 minutes. While this actually happens, we will see definitely a break. Now we have popped the Fibos on our chart. Let me just close those. So we can just split those into two. We'll have both over here. Maybe it's better if I just go to the 4-hour chart. The 1 hour is okay, just so that we can see the move over here. Okay, but even in the 4-hour chart, if you see the euro dollar, we see this big push downward. This Bollinger Band, the lower Bollinger Band slope, southern rather than northern, and this flatness over here could mean that it would be easy for the pair to move downward. But of course, this is fundamentally affected. It really depends on the result of today. And all we can do now is just wait for the markets to show us the results. Okay, there's a few minutes left. Actually, while we have a few minutes, we could just pop this chart quickly on New Zealand CHF. There we go. Go on the 1 hour, upload this. So New Zealandian and Swiss would also be a very good opportunity. This pair we have this level over here. We have this level over here. Okay. What else do we have? We have okay. This is just a support over here. But of course, if you look at it, where the activity is, all the activity is right here. So this is very close to what the price is right now. So it shouldn't have a big effect anyway, because it's very close. The other level is up there. So here's how we draw a few more levels over here. Okay. One more level is down there. We've already done this. And of course, our favorite indicator, my favorite indicator, the Fibonacci. Okay. So we'll have 1 minute left. I think I have some time to click this quickly to get the prices. There we go. Let's check the time quickly. Okay, we'll have half a minute. And here as well, we see the 23.6. Of course, 0.6886. We see already markets are moving. but I will close this chart right now. Let's go concentrate on the dollar and on the yen. And let's pop this up to here so that we can see the results coming out. There we go. Don't forget that we also expect the Canadian report to come out as well at the same time. Okay, there we go. Let's refresh. So the first break on the euro dollar is exactly this line that we popped over here. The second one will be definitely this one. Something tells me that the headline definitely came better than expected. And this is what we expected as well, but I might be wrong. I'm just expecting for this to refresh. So for me, what I want to highlight here is that those levels, as we draw, for example, this is could be an entry level because very close to the price. This could be, you know, a stop loss or something, take profit, whatever. As long as you know how to draw these lines, then you could be able, actually, you could become a better trader. Okay. Let's just check that again. It looks like we have some loading issues here. Okay, let's just go once again to the economic calendar. Trading tools, economic calendar. So this is the second level, as we said, 107. Okay. And we're just seeing the euro dollar breaking that one. Over here, we see a small spike over going up. Some of the institutions probably are taking profits right now, so they push price down and then closing the trades, the markets move back up. There seems to be an issue with this. Okay, that works properly. There we go. It's probably the updating of the calendar because all the brokers are pretty busy with this event. Guys, I see some hands popping. Yes, let me just unlock my sound, unlock my question window. Two bad and one good. Okay. Thank you, Margie. Guys, if you have any questions, I want to feel free to ask. Okay. While this is still loading, so we can check the actual results. Now, and this is exactly what we said, this is a whipsaw effect. Okay, the markets now are moving into the opposite direction. Institutions came in, moved the price into the headline direction, and then they started closing to take profits. Now, without seeing the numbers, it's hard for me to tell you exactly what is happening, but I just see that on the charts. This is what I assume. Margie, okay, average hourly earnings came 0.1. Okay, this is worse than expected. Employment change 313. Wow, these are a lot of jobs added. I'm pretty sure there will be a revision next month. Trust me, I'm pretty sure. So a very big unemployment rate, 4.1. Okay, so this is exactly as we anticipated. Now the markets will return. Everybody's trending the headline numbers. The market is moving up because the US added many jobs. Then they look at the employment rate, remained the same. Expectations were 4, so that's not good. They also the average hourly earnings. I think we're expecting a 0.2. It came 0.1. Not good. So thank you, Maji, for the data while we are waiting for the page to, there we go, for the page to load. Wow, which date is this? This is Friday. Okay, this is going a bit further down the line. So we are over here. There we go. Okay, so unemployment rate, not good. Average range, not good. And we had a very, very big addition in jobs here and a revision, upward revision. Okay, very good as well. So in terms of employment, this is a very good number. Unemployment, not a good number. And of course, the average hourly earnings is not a good number either. Okay. Okay, I have a question from Dennis. Might Euro USD rally for a short while for a perfect entry? Euro USD rally for a short. Okay, Euro USD had the short moment, I think. Now the markets will remain mixed. It will be just a game of institutions for now. Unfortunately, the numbers are mixed, in my opinion, and they are likely to, we might see a doji candle, an indecision candle closing at the end of the hour, or not. But the beginning of the next hour will set the tone for the market. Okay. I have another question from, you're welcome, Dennis, from Martin. I have done some analysis on the NFP, and I think a reversal trading on euro dollar 1 hour later is always a safer way. Am I wrong? Martin, yes and no. I'm not sure if you watched the whole webinar, but I said at some point that it's always better to wait for an hour or so to let the market settle. When you let the market settle, you are actually giving yourself the opportunity to identify where the market is going to head for the end of the day or for the next few hours. Now, what happens in most cases is that the markets will move into one direction. Let's say euro dollar will move upwards. We'll probably see another candle over here, another candle over here, and then we will see a reversal. Okay, and market will come down for a correction, and then it will move higher. This, of course, vice versa, is called a dead cat bounce. Okay, one is on the top, it's called a hummingbird. Now, there is cases though where it won't happen and there will be no correction within the next 1 hour or two, and the market will just break higher and higher. That really depends on market sentiment. So yes, you are correct. Sometimes the markets will reverse for a correction because everyone is taking profits, but also you cannot be always sure that this will work, as markets may just break into new levels. Okay, Martin, I hope that helps. So I will just look at the numbers again. Average hourly earnings came out low. So this means that inflation is not likely to rise. Now, if it's not likely to rise, now when inflation goes high, which is another component of inflation is also the average earnings, right? Because the more people earn, the more people then can spend. So the more money will be in the things will become more expensive. Everyone just have some sort of more money to spend. Okay, so there will be more demand because there will be more money to spend in the market. So the demand will rise all prices of all goods and services. Now, what normally happens in this case is the Fed, they will have to implement some sort of fiscal policy or monetary policy. The fiscal policies, of course, are different. They are political, but the monetary policy is the interest rates. So they will have to rise interest rates in order to lower the inflation. Now, the fact that inflation is not rising, but it was expected to, is also good and bad at the same time for me. Okay, because it was anticipated that the US would rise interest rates 3 times this year, but after the most recent developments and Powell's speech, markets started believing that there will be a 4th interest rate rise in order to control inflation. Okay, you're welcome, Martin. Now again, is there a way we can be holding a webinar on Forex? Damn, you're awesome, I'm learning. Or a WhatsApp group. Martin, thank you. You can feel free to email me after this webinar. My email address is displayed on this webinar at the beginning of the presentation. I also have it somewhere here. There we go. Feel free just to tap this down, note this down for a minute, and send me an email with your requirements, and I can see what I can do for you. Okay. Let me know if you had time to write that down, please. Any more questions, please? Okay, now we'll start seeing a little bit more moves and why this is. Okay, Martin, there you go one more time. This is my email address. Please note it down and you can email me after this webinar with your request. Okay, so as I was expecting those levels, of course, to be at least pierced. Okay, those 2 levels have been actually a 20 pips range, this one, and on the dollar yen we have had from there, let's say, about 15 pips, 12 pips. Okay, so as you see, and as I expected and I mentioned at the beginning, because the expectations were 200,000 and also the previous report came out to 200,000, I didn't expect a lot of activity in the markets, and this is being confirmed right now. Normally we have bigger moves than this. We have like 15, 20 pips, 30 pips sometimes, but of course it's just the first few minutes of this event, right? It's very important where the markets will be to look at where the markets will be by the end of this hour. Okay, and then again at 5 o'clock, the end of hour. Okay, and it's very important to wait for the end of the hour, of course, yes, because this is where banks are closing their orders. Okay, if I have bought something in the US and from Europe, you know, I will have to send the exchange from one bank to the other. You know, make sure if I buy a Tesla, let's say, I will send money to the US bank. There will be an exchange. You know, those books are closed at a specific time during the day. Okay, so at the end of the hour is always important because books are closed. The orders are being closed. I have a feeling that the 61.8 will be a rejection point. So price is likely to come down to the 122.6 or even 122.5 because it's a psychological level, just to get rejected, okay? Because it needs to get retested. Once this happens, we could see an up move, okay? Let me just draw something quickly for you. Okay, so we could see markets. So okay, we have an upward move from here to here. This is a correction to the 61, okay, and price could move back higher. Okay, this is for the euro dollar. Now price could even come downwards, come over here and get rejected at the 78.6 and then go higher. Okay, we don't know this, but we could see right here a rejection or a break. Okay, we could even see price breaking this level, coming back here and then going downwards. Okay, don't forget markets are moving in cycles. Okay, so here we have one move, two moves, and a third move. Okay, and now we have one, and we should have a second wave down. Now, where is price going to head to? We don't know. We don't know if this cycle will be two wave or if it's gonna be another pattern. Okay, we don't know this. Now the same for dollar yen. Price extended. This is the first wave. Okay, that is a second wave, and this now is the third wave that is being created, formed as we speak. Then we don't know where this is going to extend either. It could go back up higher to 161.8, right? And then afterwards, it will reverse. We will have two waves down, probably, most likely. Okay, so saying this, both of those levels, 61.8, 78.6, this one over here, of course, on the dollar yen, they are very, very important. Now this is closer and this is a better one normally for reversals because it's a psychological level and because we have had a big move. The market's moved up all the way from down here, okay, in the past 2 days or so. Now know that normally the markets would expect a correction from here, so we could see something like this and then markets will go back up. Okay, so this level over here, we could see another candle over here and then this. Here we normally expect a doji candle, indecision candle. Wong Shu, do you do analysis on Dow Jones? Analysis on Dow Jones, okay, we can pop this up, it's no problem. But note that it's very risky to trade NFP with on equities. Okay, so hold on, because I think I have it somewhere here. DJ, there we go. Let's open a new chart. Oops. Let's open a new chart on the Dow Jones. Slow down template. On the 1 hour chart. Okay. Fibonacci right here. We had a rejection at 61. Price moved above, false break down to the 50, and now it's heading upwards, likely to go to the 23.6. Okay. Let me just I think this is the wrong indicator, but 1 second, let me just delete this quickly. Okay, delete this. So yeah, on the equities, we have less liquidity, so the markets are more volatile. Okay, and this could mean that, of course, there is more risk. More risk means that um, you could be a victim of a big loss. And this is not always this is not good, of course. Apologies for this loading issue. Something is wrong with MT4 right now. It's not responding. And I think it's best if I just restart it. Okay, we're back on. Woo, no worries. We can check this again. We just have to wait for a minute. So this is a very good number for NFP, the headline. I'm not sure when it was the last time that this number was seen, but it was definitely somewhere last year, somewhere near this, and a very good upward revision too. So look at this. The analysts were out 113,000 jobs. This is a huge divergence, and it's hard to really identify and indicate what it really means for the analysts to be that much out. Is this good? Is this bad? Why were they that much out? What happened to their, to their analysis? Is their modeling going wrong? Is the market going wrong? Weng Shu seem to have problem with MT4. I apologize. My apologies. So let's try one more time maybe. Okay. MT4. I will just leave it. I will just let it load for a minute here while we're looking at those results. So also the year-on-year average hourly earnings fell. Okay, and that was revised down, which is not, of course, a good indication. Okay. Labor force participation up, but not such a big effect on the markets. The biggest one, I think, is the unemployment rate. They were expecting a decline of 0.1%. It didn't happen. Is there any more questions I can answer for the time being while we're waiting to see if this is going to work? Okay, I'm not receiving any more questions. We'll have less than 5 minutes to finish this webinar. So I don't think this is going to load for today. So we'll just wait a couple more minutes to see if anyone has any more questions. And of course, if there isn't any, I will close this off. In case you have any questions, I have presented here all my details. You can feel free to email me, of course, at my email address. Feel free to connect with me professionally on LinkedIn or follow me on Twitter for daily updates and news. While we're still waiting for this to load. Sometimes the market does not move based on the market news. Maji, yes, it doesn't. It does and it doesn't. The news have ended up being an instrument of manipulation from institutional traders. When the markets are moving up and everyone is trading up, they'll be the ones that will trigger the first sells by closing their trades and taking some profits. So that's why it is very important. That's why it's very important to let the market settle first for a few hours, 1 hour, 2 hours after the NFP. Okay. Okay, I see some movement here on the MT4. Yes, even if they have high priority, it doesn't really matter. As you saw, the markets moved up because of the headline number and on the dollar yen, and then they moved lower because the average earnings, the wage growth, and also the unemployment rate did not come out as expected. Okay, back on the Dow Jones. I was saying about the Fibonacci. Okay. The Fibonacci shows us a retracement, a correction down on the 61.8, around 2400, 24.4. And after this, the market moved up. Now we had the first wave upwards, and then this is the second wave upwards, probably going to come to some higher price than here. But that would have to be identified by using the Fibonacci extension, which currently I cannot use, unfortunately. If you have an open position, margin during the NFP, there is two options. One option is to close your trades and take profits, or have a small loss, depending on where the market is actually at the moment compared to your trade. The other option is to hedge. Of course, hedging is not easy, and you should not attempt it. You should not attempt it if you're not familiar with the strategy. And the third option, of course, is to do nothing. But you're there playing 50-50, playing tails and heads, because you don't know what the result will be. So it could have a positive effect on your trade or a negative effect on your trade. So back to the Nasdaq. This is it for me. This is what I see. This is could be a double top if price retraces back to that level, or price could continue up, okay, to extend the second leg. We see a very good break right now of this recent high. Okay, there was no liquidity whatsoever, and now of course we see this upsurge. Okay, if there is no more questions, we'll wait for another minute actually. If there's no more questions, I will close this right now. You should be aware, you should know that this webinar is recorded and it will be sent to you via your emails, and it will also be online on our YouTube channel, okay? As all of them have been, actually, okay? So if we type YouTube on Google, plus the NFP, plus the FXPRIMUS, you should be able to find those videos. Okay, so all of our videos are here of all the NFPs. Okay, this is August, November. Okay, there's other webinars, of course, but you should be able to have a look at all of those. Okay, if you follow our channel. There is another range of videos, of course, as well, daily markets. But if you if you want to learn more about the NFP, you can identify those videos and have a look, go through them, and see how the markets move. Okay. Now, I would like to thank everyone for attending this webinar, and remind you that you can still feel free to email me at my email address if you have any questions that you forgot to ask, or to help you in general with your requirements. Thank you very much, and have a nice weekend.